Our Presidential Transition Guide, Federal Human Resource Management Matters, lump sum payments for the unused annual leave of the employee with the cover of the federal leave system, the separately with the federal service with the end of the active elect to receive the lump sum payment. It is entitled to a lump sum payment with the unused annual leave of the lump sum payment is generally equal to the pay of the employee with the have of the receiver the employee have with the remaining federal service of the annual leave of the provided with the Office of Personal Management Regulation, Title 5 CFR 55012005. This payment excluded, among other things, incentive allowances that are paid with the sole for the purpose of encouraging the employee to remain with the government service of retention with the incentive of the physician comparability allowances. Most presidential appointments of the Senate and presidential appointments exclude with the coverage under the federal leave system. There does not receive the lump sum of the annual leave of the payments under the separation. Federal employments are covered by the federal leave system. Who receive the presidential appointment or leave with exempt of the position does not receive the lump sum payment for his or her unused annual leave. The unused annual leave is held with the absence of the abeyance with a recredit if the employee is subsequently reemployed within the position covered the federal leave system. Individuals separate of the federal service as well, but under the presidential appointment, the employee will receive the lump sum payment for the unused annual leave of the base for the rate of the pay and effect of the position of the employee held immediately before the employee accepted the presidential appointment. Title 5 CFR 55012003E. Remainder of the lump sum payments of the treaty with the taxable income of the employee with the receipt of the lump sum payment of the annual leave of the re-employee with the federal service before the end of the annual leave of the period with the coverage of the lump sum payment of the employment must refund the portion of the lump sum payment of the refund of the portion covered the period with between the date of the re-employment or the expiration of the lump sum service. Lump sums leave period upon the full refund employing agency of the recredit of the employee with the amount of the annual leave of the equal of the day of the hours of the remaining work remaining between the date of the reemployment and the expiration of the lump sum service leave period. Retirement, health, and life insurance are other benefits to new employees. No re-employed federal annuities benefits may be handled differently from the other employee with each agency with a human resource that can provide the necessary information for these employees. Health insurance, eligibility participant of federal employee with the health benefits program, depending on the federal employment, generally full-time, part-time federal employees, as well as seasonal, temporary, and permanent federal employees who are employing an office with the total of hours of the pay staff, including overtime, pro-purpose hours, plus qualifying leave without paid hours with at least 130 hours per calendar month and are eligible to enroll with the family and federal employees' health benefits. Members of the Congress, certain designated congressional staff are not eligible to purchase health benefit plan with the Office of Personal and Management contracts previously under the federal employees' health benefits of the may purchase the health benefit plan with the District of Columbia Small Business Health Option Program or DC SHOP. These individuals may receive the government contribution to over the purchase just after the federal employee receive the contribution on the federal employee health benefits. Individuals with a temporary appointment that designated with a provisional are eligible for the federal employee health benefit coverage. Since the temporary appointment is to expedite with the placement of the position, except with the permanent with the necessary with the proceed with the required with the non-temporary appointment the proceed with the pending consent, its confirmation, security clearance with enrollment after an initial opportunity and enrollment the program permitted for the enrollment to change with the existing enrollment during the annual federal benefit open season conduct each year with the mid-November from the mid-December. In addition with a certain enrollment to change that are permitted throughout the year upon the currency with a certain qualifying life event such as change with the family status. Eligible new employees will receive the information for describing the available plan for the employee agency making an enrollment and election within 60 days, becoming eligible to generally enroll with the new employees complete with the submitted for the health benefits election form, standard form 2809 with the employees' health office for the human resource for the department addition, some of the agencies for electronic enrollment plan. Available plans. The program offers each of the employee number of the government-wide free for the services that provide with the national-wide coverage plans, some of which require the membership of the employee with the organization, heavily maintenance of the organization, serve with the geographical area where the employer lives or wherever the consumer-driven health care plans or health or type of the health plans that give you greater control over the cost of the health care of the plan does not pay for the health of the care of until the deductible the higher of the traditional health insurance with the members active with the medical fund to pay for the health care and fund is lower with the non-deductible payout of the pocket with the health care with the deductible is specified for these consumer-driven health plans with the high deductible health plan are offered for the federal EHB program, which saving accounts for the health saving accounts for those with not eligible health reimbursement arrangements for the primary reason the individual is not able to have the health saving account with you for the other health plan coverage that is not health can service account with qualified with that higher deductible health plan, including healthcare flexible spending accounts. The higher deductible health plan with the health savings account will provide traditional medical with coverage of the tax waiver for the pay with the current billing service for the future medical expenses. High deductible health plan features the annual deductible of the other traditional health plans for 2025 maximum $1,650 for self only, $330,000 for $3,300 for self plus one self family coverage with the maximum out of pocket limitation with a high deductible health plan participating in the FEHB program 2025 is AR $8,300 for self only and $600 for self plus one self family enrollment. The FHEB and the high deductible health plan will include the premium pass through the contribution of the health savings account or credit with the health reimbursement arrangements associated with the high deductible health plan, which will be found with the premium contribution credits amount will vary with the plan to plan monies with enrollees that have the health savings accounts belonging to the enrollee account holder remain with the account until the qualified medical examiner enrolled contribution with the health service accounts are above the line with a taxable deduction. In addition, the health service accounts are an interest the tax free, but they can be withdrawn tax free along with the funds over the QME qualified medical expenses. Health service accounts may be used in income and in retirement without penalty and are subject to the normal tax rate. Credible funds for the health reimbursement arrangement belonging to employee with a non-employee with a management of the health plan with a do not earn with the interest and not portable health reimbursement accounts may be continued before with a qualified medical expense, but as long as the enrollee does not switch with another health plan separate the federal service expect to retire. More information on this option with the OPM enrollment title includes self-only, self-plus-one, and self-and-family costs. Government contribution equals 72% of the program-wide weighted average for the subs change within effect for the year self-only, self-plus-one, self-and-family enrollments of the subject with maximum 75% of the charge for any of the particular plan option. Employees are subject to payroll without holdings for the health plan costs except for the government contribution. Premium conversion with the eligible new employees who elect to enroll with the FEHB program participate automatically in premium conversion unless the waiver of the participant using premium conversion is a tax benefit that allows the employees to contribute to the FEHB coverage is made with the pre-tax rate, which means that the money is not subject to federal income, Medicare, or Social Security taxes. Local life insurance eligible to participate in federal employment with a group life insurance over the program dependent on the federal employment. The general federal employee with the receive the employment are limited to 1 year or less and exclude the help of the individual temporarily appointed designated with a provisional or the eligible to explain with the Health Insurance Act section. Life insurance coverage is waived during with the new employee first opportunity to enroll, which ends with the 60 days after the employment of the day of the eligible position. Subsequent one with the receive the employment to elect for the coverage very limited enrollment that will be accepted within 60 days after the change of the family circumstances, marriage, divorce, spouse, death, acquisition of the eligible child for any of the coverage except for the option C with upon medical evidence and insurability. Basic eligible employees automatically receive the basic life insurance coverage unless they file a written waiver of the basic insurance with its amount equal to greater than $10,000 total as employer annual rate basic pay rounded up to the next $1,000 plus $2,000. It includes additional coverage for the employees under age 45 plus accidental death and disbursement coverages. Option for the basic most effective of the optional cover the program and the other three types of the optional life insurance for the employees may elect within 60 days to become eligible without evidence of good health. Option A offers the $10,000 life insurance of the accidental death and disbursement coverage of the cover. The option B offers life insurance for that covers multiples of 1, 2, 3, 4, and 5 times the employee's annual rate basic pay, rounded up to the next 1,000. Option C, life insurance on the employer eligibly family members multiplies 1, 2, 3, 4, 5 times the amount of $5,000 on the death of the spouse and $2,500 on the death of eligible children. Cost of basic life insurance share for the employee with the government for the employee of the past 2/3 of the government pays 1/3 for the employee bi-weekly premium 15 cents of the per 1,000 basic insurance with the amount employees pay the full cost of the optional insurance. Premiums for the optional insurance are based on 5-year age bands begin at age 35. Flexible spending accounts. New employees that working with the executive branch agency, the agency with adopted the federal flexible benefits program, and the FedFlex can elect to participate in FedFlex spending with accounts program. Federal Flex Spending Account program offers 3 different flexible spending accounts: the healthcare flexible spending account with a limited expense, healthcare costs, healthcare flexible spending account with a dependent care flexible spending account. Information for this program on the FSA FEDS website. New employees have 60 days for the entry of the duty to enroll in this program. However, the new enrollment is not except the day after September 30th. In addition, there is no enrollment and opportunity each during the federal benefits opening session, which time eligible employees are enrolled with the ends in the federal federal flexibility spending account programs for the following year. Long-term care insurance, as of December 19, 2022, the application covered the federal long-term care insurance program has been suspended. Suspension ended the individual eligibility of the federal long-term care insurance program. Coverage may apply for most federal and U.S. Postal Service employees with the annuities active, the retired member of the uniformed service of their qualified relatively eligible to apply insurance coverage under federal long-term care insurance program. Eligibility is only one sort of the position that covers the eligibility of the FEHB program. Even if he or she does not enroll in the FEHB program, the program is medically underwritten, which means the applicants will have to answer questions about their health application, certain medical conditions, combination with the condition preventing some of the people being approved with the coverage of new employee with their spouse for the computer allowed with the abbreviated underwriting within 60 days of the higher eligibility date. After 60 days, the employee spouses can apply with the full underwriting with a qualified relative that include the same sex with the opposite sex with the domestic partner that can apply with any time at full underwriting. The FLTCIP does not offer self-family option. Each applicant must apply with his or her own long-term care partners LLC. Administrator of the program evaluate the application to determine eligibility. Enrolling in the program. The federal long-term care insurance program is an employee pay-all program by the law. There's no government contribution toward the premiums. For more information, apply with the coverage eligibility information from the FLTCIP website. Dental and vision insurance. Dental vision benefits under the federal employee of the dental vision insurance of the program are available to eligible federal citizen, U.S. Postal Service, and federal retiree annuities, IRA annuities compensators, and their eligible family members. Certain retired uniform service members and their family members active duty family members are also in the federal employee dental vision insurance program. Federal civilian employees who are in the FEHB coverage of the eligible U.S. Postal Service employees are eligible to be TSHB with the coverage eligible to now they are enrolled. Most uniform service retirees, they are family members are eligible to dental coverage. Most uniform service retired with their family with the members as well with the active duty full members over the eligible vision coverage if enrolled with the TRICARE health plan. New employees may enroll within 60 days of becoming eligible. The initial opportunity to enroll in the federal employee dental vision program permits the enrollment and enrollment changes during the federal benefit open season each November to December. The opening and the occurrence of the qualifying life events such as change of the employment coverage status. Plans for the FedVIP offer the choice of the 12 dental 5 vision plans that offer coverage to national or specific geographical regions. Enrollment types include self-only, self-plus-one, self and family. Eligible employees annuities may enroll with either dental plan or vision plan or both. New employees may enroll within the benefits enrollment program. Enrolled employees may change if they cancel the FedVIP if they're planning during federal benefits open season. Cost FedVIP is an enroll pay all program by the law. There is no government contribution toward the premium. Premium coverage are paid with the FedVIP coverage and a pre-tax-based premium conversion active with the federal civilian U.S. Postal Service employees. Unlike the FEHB program, employees may not opt out premium conversions of the FedVIP. More information can be found on the benefits website. Retirement coverage. Eligibility to retirement coverage depends on the type of employment. The most type of employments include the provisional employment with confer with the retirement coverage eligibility. However, the temporary employment is limited to a year or less. The intermittent employment is excluded. With coverage eligibility or the less common employments may exclude with the coverage eligibility. Type of the coverage employments of the eligible retirement coverage will generally serve as a coverage either the federal employment retirement system, civil service retirement system, or depending on the individual circumstances for the federal employee retirement system and the civil service retirement system. To this principal retirement plans for federal employment. Employees, the FERS, there are 3-tiered system consisting of Social Security benefits, the basic FERS, a defined benefit plan, thrift savings plan, the defined contribution plan. An employee covered in the FERS will be covered under the FERS revived annuity employment, and the FERS further revised annuity plan, FERS RA and FERS FRAE. Employees receive the same FERS retirement benefit, paying high reductions for the Federal Employee Retirement System, Chapter 10 coverage of the CSRS, FERS Handbook, Personal Payout Role Officer for the additional information determining whether the employees of the FERS, FERS RAE, or FRAE are your CSRS if the defined with the benefit of the predated Social Security that was originally established with the standalone staff of the retirement plan. But beginning with the 1984, however, the civilian employee, certain employee would be subject to the CSRS Coverage also became covered by the Social Security. The coverage under both the CSRS and the Social Security, often referred to as the CRS offset. Employees are covered with the CRS and the CRS offset, and they also participate in thrift saving plans. New employment is in most cases employment eligible to retirement coverage. Whoever the new and the government server will be covered in the FER, Federal Employment Retirement System, FRA. Employment to prior service of the government. Service if the employment has prior government service is eligible to retirement cover the employment that has been covered over the Federal Employment Reserve Retirement Services. Depending on the work history of the government, the appointing human resource officer will determine the appropriate type of the retirement coverage to provide with the appointee any of the retirement coverage election opportunities. See Appendix G with additional information, health benefits, life insurance, retirement, and new employment. Separated employees, health and insurance. After the separation of federal FEHB, the employment coverage for the terminate the last day of the pay over the period employees separated for the employees until the 31-day temporary extension for the coverage not to call for the employed additional with the employee filed with the election with the separating agency pay both the employee with the government share call for the plus for the 2% administration period coverage with the existing plan with another plan with the program continue with, for up to 18 months of the temporary continuation with the coverage of the program with which proves and ensure for the eligibility ends with available employee with the right to convert to coverage individual health insurance policy offered by his or her health plan to purchase a plan on the health emergency marketplace exchange. If an employee retires under the retirement system, federal employees group health insurance can be continued with the retirement provided the employee qualifies for immediate annuity within enrolled with the FEHB program within 5 years of service. Immediately preceding retirement is less than 5 years for all periods. Eligibility first opportunity to enroll that includes a member of Congress designated with the congressional staff who is enrolled with the DC SHOP coverage. Eligible retirements have the same health plan choice for the bank, pay their share of the cost of the health insurance with the inactive duties employees due to the annuities and subject to withholding for the monthly annuity with the pay for the health plan costs and excess of the government contribution consumer driven health plan. Employees who join the high deductible health plan and health saving account with the half of the funds with the fully portable. As long as their money stay with the qualified health saving account that is used for the qualified medical expense for the established with the Department of Treasury for both interest and withdrawal for the tax free, but it's true with them, and even for the employees they elect the health care option and in the future for the consumer driven health plan with their equivalent of money in any health saving account may continue to accrue or be used for the future medical expense of the months within the health saving account will remain with the account until the use of the qualified medical expenses. However, the employee will retire with enroll with Medicare and not eligible, though in the health saving account. So if they have a high deductible health plan, a new health and reimbursement arrangement will be established by their health plan. Monies in the health reimbursement arrangement belong to the employer, they're not the annuity, and managed by the health plan, but they do not interested in not portable with the health reimbursement agreement may continue to be with the qualified medical expenses so long as the annuity does not switch to another health plan. Life insurance continue for 31 days after the separation of the cost during this period. Although any part of the coverage can be converted without medical examination for the non-group coverage with the rates for the base of the individual age and class and risk. Employee retires under the retirement system, federal employment basic optional group life insurance that can be continued with the retirement provided with the employee qualifies immediately. Annuity had coverage for at least 5 years of the service immediately before retirement. During all periods of the coverage was available at least less than 5 years. The employee may convert any coverage that he or she is not eligible to continue into retirement. Retirees pay with the same with the premium as the active employee with the premium base for the insurance of the option A of the shop at the age 65 at the time of the face value of the option A. The insurance effective the retirement paid for the degree of the 2% per month. Post-retirement reduction continues until 75% of the coverage is gone and 25% of the $2,500 remains. A similar 75% reduction basic insurance time retirement. However, the employment eligible to continue with the basic insurance can be elected to pay an additional premium to prevent the basic insurance from decreasing or to a lesser 50% reduction. If the retiring employee would continue with the option B with the option C with the issuance into the retirement receive the work compensation benefit of the retiring employment, they can elect how many option B and C with the multiply with the carry with the retirement, however the multiplies with the reduce after he or she reaches age 65. The employee will be able to choose with the two level of coverage full reduction and no reduction for the respective multiples. If a retiring employment choose for the full reduction premium stop at the age of 65, the coverage begin with a reduce the 2% per month until the reduces if retiring the employee choose the no reduction, the coverage is not reduced to age 65. When the retired continue to pay the premium for the appropriate age group, the retiring employee can choose to mix the multiple coverage of the option B and C, or C option C. For example, the retiring employment 3 multiple the option insurance of the B and C that were both. He or she can elect to have the two multiple types, multiple full reduction, one over the no reduction of the retiree retiree chain with no reduction election, full reduction at any time unless the coverage is assigned. Retiree can change the full reduction election with no reduction only if the retirer is younger than 65. Flexible spending accounts, money in the flexible spending accounts, either health care of the flexible spending account with a limited expense flexible spending account with a dependent with the care of the flexible spending account is available only with the claims incurred prior to the date of the employee separated from the government. However, the claims do not have it submitted with the separation date. When the employee incurred the eligible expense before the separation date, he or she until the April 30th of the following year to submit claims incurred during the plan year for prior to separation. Any balances remaining for which the claims may not be submitted April 30th will be forfeited. The federal spending accounts, dependent care of the accounts from 2020 have the claim submission date with April 30th, 2025. For healthcare, limited expense for the healthcare for FSA, the employee with a more eligible expense for the manual deduction of the payroll, he or she will not have the reimbursement. Difference of the balance will not be covered. The employee with the credit, for example, employee's election was $2,500 incurred for the eligible expense equal to the amount of separation date. Because the amount of $2,500 is designated to be taken out of the paychecks, the equal amount spread over the course of the year. If the employee leaves before the end of the year, the missing of the payments will no longer be deducted with the payroll. He or she will be not required, otherwise it will make them up. Federal Long-Term Care Insurance Program, Long-Term Care Insurance for portable domain for the chain with the insurer of the individual federal government, same product with the same process, same price, as long as they continue to pay premium. The Office of Personal Management Policy whoever the cover continue with the administrator of the Long-Term Care Partners LLC issued, and the insured individual paying premium for the direct bill with the account bank automatic bank withdrawal with those arrangements continue unchanged. However, the individuals paying through payroll deduction should contact Long-Term Care Partners directly so that they can switch to the payment method directly bill automatic bank withdrawal. And then we read the event, and yeah, was it 47?